Welcome to Real Estate in Real Time. I'm your host, Woody Zimmerman, here with Mark Skowalski of Remax Lakes. Welcome to the show.
Here we are. Good morning.
Good morning, and we have a very interesting show.
Well, we think so.
Yeah, we think so. A great topic, a topic that I know that you get asked every single day.
Yeah, regularly.
Yeah, because we've been in a hot market for a long time. It's been great for sellers.
Yeah.
Not so great for buyers in the fact that there's low inventory.
Low inventory and prices are going up.
And prices are going up. So it's been great if you're selling a house
Right.
and you're going reducing, or downsizing and going to a condo or something. Hey, great for you. Buyers, it could be a challenge.
It can be a challenge. So I guess the real question is, when will the market turn?
Yes.
When's it going to happen, Mark?
I'm sure you're asked this every single day.
I wish I knew.
Yeah.
I wish I knew. And my standard answer is, well, Nostradamus is right once every century, so I guess I could predict. So
Yeah,
in
there
100
you go.
years, let's check my answer, right,
Exactly.
and see if we're there or not. But so not only when will the market turn, but are we in a boom? Are we going to see a bust?
Mm-hmm.
And I think that is probably more indicative of what all of the analysts are saying is they don't believe we're in the same situation where we were in 08, 09 with the last bust.
Okay.
Because that is still fresh, and those of us who survived it,
Oh yeah.
who lived through it, it's fresh in our minds. What happened? Why did we get there? What's the biggest difference now compared to what we were seeing in 2008, 2009, that run up to where all of a sudden the market just dropped and nothing moved?
Yeah.
So the economy failed. I mean, there were a lot of things that led up to this. But what has changed in the system? And when I say the system, I'm talking about the entire, not only the real estate market, but lending. How does that impact? And no matter what we say or think or do, the economy and the economic conditions definitely impact the housing market.
It does.
Every day. I mean, if you're not comfortable in your job, are you likely to go out and spend a lot of money buying something that you don't necessarily need to have, you'd want to have?
Right. Not at all. Yeah.
I heard a study this week that Thor Industries is out of inventory. So RV sales have boosted through the moon. I mean, they're just ridiculous.
Well, okay, and so when you're talking about that, I remember 2008, 2009, like it was yesterday, and I remember President Obama went to Elkhart because that was like the epicenter
That's correct.
for problems. I
Right.
mean, the economic conditions in Elkhart completely tanked. Where I remember Warsaw, where we saw foreclosures just like
Right,
everybody else,
right.
but we weren't hit nearly as bad as like Elkhart, which is a stone's throw away.
Right. I mean, 15, 16, 17% unemployment.
Yeah.
I mean, the national average was up significantly high. I don't remember the exact number, but I do remember in the 15s
It was bad.
that we had, unemployment. But RV industry is booming right now. You can't
is.
keep anything in stock. Boats are booming. You can't find a used boat. They're all sold.
No.
New boats.
All
The
sold.
delivery times are all. So basically, the economy impacts the housing industry just as the housing industry helps along with the economy. We're a big part of what goes on in the economy. So what are analysts saying? Why won't we have the boom again? Or, I'm sorry, the bust like
right.
we did in 08 and 09.
Right.
Part of it is the low inventory. So much as we complain about there being low inventory and driving prices up and all of those things, the fact that we don't have oversupply is helpful in alleviating concerns for there to be a sharp drop-off in the market. Now, is it the end-all? And again, I don't want to paint it to where any of these topics specifically will do it in and of themselves, but if you look at them in their entirety, they all impact the housing market and ultimately the economy.
Right.
So low inventory. Back in 08 and 09, we had oversupply. So when the economy started to go south and there were just too many houses, not enough buyers, prices started to decline, you saw people going to foreclosure for losing their jobs, those kind of things. What's that do? Drives prices down further, more supply. It was a mess. So right now, between the inventory issue, low inventory, and low supply, those are two things that are different than we dealt with in '08 and '09, which led to a lot of that meltdown that we had and I say '08, '09, it was 7, it started, then 8 and 9. We started to recover in 2010, but that's a long time.
Yeah, it is a long time.
That's a long time to get there. So new housing starts now. We're starting to see them, and off air we talked a little bit about, why did we all of a sudden there was no construction? Well, '08 and '09 drove a lot of builders out of business.
Mm-hmm.
It built the little guys and gals out of the business. The smaller companies that were doing, smaller units, smaller number of units, they couldn't survive.
No.
You built 2 and you might sell 1.
Yeah.
But you got to pay the loan for the materials on everything you've got. You got to buy the ground, all of those things, and you're out that money if your house doesn't sell.
Yeah.
So the only way they could sell it was to discount it and ultimately sell at a loss. Doesn't make any sense from a business perspective. So we lost a lot of construction companies during that time frame.
Okay. All right, and you got more of the reasons why we're not going to have a bust like '08, '09, which is good news. And I want to hear the rest of this. We're going to talk about this coming up here right after the break. You're listening to Real Estate in Real Time. Welcome back. You're listening to Real Estate in Real Time, talking with Mark Skabowski of RE/MAX Lakes. And we're talking about how, everybody's asking you all the time, when will the market turn?
Right.
Okay. When will the market turn? Because the market has been hot for a long time now. But you're talking about reasons why we're not going to have a bust like we had, before, because a lot of people are worried about inflation. A lot of people are worried about, hey, what's going to happen?
Right.
If you look over at, GM, there's like all these trucks that they're waiting for the chips. Is like, is there going to be a recession, coming up and so forth. And so you gave us one reason why the experts are predicting that that's not going to happen, and that's because number one, low inventory. You mentioned that,
right, and low supply,
and
which
low
goes.
Supply.
It's almost one and the same,
right?
But those two things definitely are going to impact what's going on.
So that's keeping prices up.
That's keeping prices up, and I think to add to that, and I don't have a measure on this, but high demand.
Yeah.
And how do we? I guess I say I don't have a measure, but measure the days on market, and what's it tell you?
Oh yeah,
there's high demand.
Yeah, right.
Right? Doesn't take a rocket scientist to say that 30 days or less on the market, things are moving very quickly. There's still demand out there.
Yeah, every time you put a property up, you got multiple offers within a couple of days, if even that long.
Right. So I guess the other thing, one of the other points that comes out, favorable demographics. So what does that mean? Demographics, big deal. Well, there are 5 million millennials who will be turning 30 this year.
Wow.
And another 5 million more that'll be turning 30 in 2022. So I look back at myself, when did I hit my peak earning years? If you think about it, whether you went to college or not, but when you're in your career, you graduate high school at 18, 10 years later, where am I? I'm in a different position than I was when I was 18.
Yeah.
Hopefully we've made good decisions along the way,
right,
and we've set ourselves up financially to where we're now ready. So, but that 30-year-old group, they're families are happening. They're securing their jobs. Their earning potential is there. They're earning good dollars. They're ready to buy a house. So the good news is that there's 10 million more potential buyers in this year, next year. Now, they're out there today. There's other age groups, but we're specifically saying those millennials that are in that 30-year-old range group are going to be looking to buy homes in general. Maybe not all, but in general, they're going to be looking. So that's a positive thing for the market. That would, again, we didn't have that in '08, '09.
No.
We didn't have them turning that. If you think about that, that's 13 years ago.
Yeah.
They were just graduating high school.
Yeah.
Right? They saw their parents going through the crisis of '08, '09.
Right.
And then now they're thinking, okay, am I in a better position? The national average for savings has gone up dramatically through the pandemic. The people are saving more money than they were spending.
Really?
They are more savers. I know I've got, my oldest daughter was born in '90. She is a saver. She is a saver. Now is she the indicator for all millennials? I don't think so.
Right.
But I know many of her friends are savers too.
She must be listening to Smart Money's Management Ellen and Mike.
She's working with Alan Alderberg and Mike Bergen. That's it. That's what they're doing. So, it's just a good time for those folks. It's about the right time for them to purchase. Low mortgage rates. They're predicting through the end of this year, we're still going to have good interest rates. Even when they go to 4%, that's still a darn good interest rate.
Yeah, I don't see that fluctuating that much.
No.
I mean, it's just
No.
I think the government is trying to make sure that those do stay down so that they can so buyers can afford.
Yeah,
to buy.
absolutely. Because if you jack that price up, and back, I don't know, when we had the last bump up to around 4%, we did a show on what's the difference between buying at 3% and buying at 4%, and it's significant when you go into a higher value home, a higher mortgage amount.
Mm-hmm.
So speaking of mortgages, probably the largest reason, again, this is just my opinion, in the reason we won't have a bust is the tightening of credit. After 08-09, even though I hated a lot of the changes as they were implemented, because I don't like change, but as they implemented a lot of those changes, they really tightened up on loans that we shouldn't have been doing. I mean, they were doing 100% financing, interest-only loans, meaning you're paying your payment, you're paying no principal down on the loan.
Yeah.
None.
Yeah.
They were giving credit to people that didn't really need to be buying houses. I think I shared at one time I sat in on a closing for another agent. Their buyer was taking a first, a second, and a third at the table to buy a house.
Wow.
Now, if you are on the hook for much more than the house is worth in order to buy it, probably not a good decision to buy that house.
No.
Now, they needed somewhere to live, and I get it, but we're not seeing that anymore. So that is one good thing that came out of that crash is the tightening of credit. And we said it as an industry, we can't continue to do this. I don't want to see people go into foreclosure. It disrupts lives. It disrupts long term. It disrupts their families. It disrupts a lot of things. It sets them up to fail long term. So we don't want to see that. So tightening of credit is probably the single largest thing that impacted and is going to ensure we don't have a bust like we did in 08-09.
And banks, even though they enjoyed it when it was building up to that bubble, but they don't want to go through that again either.
Nobody does, because again, foreclosures don't help any of us. It drives prices down. When they go through a foreclosure, it's disruptive to the families. It's disruptive to a lot of things. So, the banks have learned from that. The tightening of credit is only a positive.
Well, I feel better having this conversation.
Oh, good.
Yeah, I certainly do. All right, hey, Mark, your contact information?
Sure. Our website's lakes-realtors.com. Phone number's 574-834-1233. Check us out on YouTube.
All right.
Real Estate in Real Time.
Okay, do it for sure. All right, you've been listening to Real Estate in Real Time. Have yourself a wonderful weekend.